I've been in the investment business for over 30 years. I've never seen the price of gold rise by $100 in one day. I've now seen it 3 times, although it didn't always close that high, but 3 times since Liberation Day. So we really liberated gold on Liberation Day, but this is a big deal to see gold moving up like this. And I was forecasting years ago that one day we would see gold moving in much bigger increments. Now, I know as the price of gold gets higher and higher, when you're talking about $3,000 gold, $100 is not what it used to be. When gold was 300, 400, 500, right? If it moved 100, it would be much bigger. But, I think we're going to see days where gold's up 200, 300. I mean, those days are coming. But, what's more significant even than the increase in the price of gold is the fact that nobody cares. Nobody pays attention. I've said this before, but it bears repeating. When you don't know there's a bubble, you don't see the pin. And that, is something that I came up with that line during the housing crisis, because a lot of people, even after 2007, after the subprime market really started to collapse, most people just shrugged it off. They didn't care. They thought it was nothing. They thought it was contained. I knew it wasn't, because I knew we were in a bubble. And I knew that subprime pricked it. But because the mainstream had no idea that we had been living all those years in a bubble, they didn't notice the pin. I did. Well, gold is the pin, and Trump is the one that inserted it into the bubble. Now, gold was already rising before Liberation Day, but Trump really stuck it in there, and the bubble is deflating. But if you don't know that there's a bubble to deflate, well, you don't realize that it's been pricked. And so you kind of make excuses for the pin, which is what CNBC is doing again. I mean, they did it before, when I was coming on their air back in 2006 and 7 and 8 even, warning about the housing market and the financial crisis that would ensue when it popped. And they just labeled me Dr. Doom. And they had a lot of fun laughing at me and making fun of me until all my predictions came true. And then they kind of stopped inviting me on, although they still invited me on a little bit, just not as much. And then they eventually, once the Bitcoin advertisers, showed up, they basically banned me completely. Maybe those things are just a coincidence. I don't know. But it's interesting that the talking heads on CNBC are oblivious to gold and the bubble that's been pricked. They're as oblivious to this one as they were to the housing bubble. But anyway, so I'm watching. I get up early in the morning. And I'm not sleeping that well. So much stuff is happening at night. I get up and I check the markets, and then, it piques my interest. I try to go back to sleep. Sometimes I do. And, so I need to get more sleep. But in any event, I'm up early, and this show Squawk Box comes on, and it starts at 6 a.m. New York time. So it goes 6 to 9. And so I get up, and the price of gold is up $100 an ounce, or 90 at that. Maybe it was only 90 at that time. And I'm like, God, I got to, this is a new record high. We're above 3,300 and I'm like, okay, yeah. I mean, this should be the lead story, right? I mean, you're supposedly this financial news channel. You're going to be bringing your audience the big financial news of the morning, and you got gold up almost $100. You would think that this should be the first thing that they talk about, because, this is not just some commodity, some random commodity. This is gold. Gold is special in the world of finance, right? Gold is the canary in the economic coal mine, and it's even yellow, right? So you're supposed to pay attention to gold.
Look, I've been in this game for over 3 decades. I've watched markets melt down, inflate, collapse again. And I can tell you with absolute certainty, this is not normal. When gold, the world's ultimate monetary metal, starts leaping like a meme stock, something has snapped. This isn't about supply and demand for jewelry. This is about confidence. More specifically, the collapse of it. Now, I've seen gold move $20, maybe $30 in a day, especially during some global drama. But we're not talking $30 anymore. We're talking $100 in one session. That's not a fluctuation. That's a wake-up call. It's not an earthquake. It's the San Andreas fault giving way. And while that's going on, what's CNBC talking about? Bitcoin's new partnership with some fast food chain or the latest meme ETF? Please. And don't think this is a fluke. It's happened 3 times now. That's not a coincidence. That's a pattern. Gold doesn't just jump like that. unless the smart money sees something coming. And believe me, they do. But what's most shocking isn't the move in gold. It's the deafening silence from Wall Street. The fact that gold's making these massive moves and nobody cares tells you everything you need to know about how far gone we are. You know what this reminds me of? 2007. The housing market was cracking, subprime was crumbling, and the media was busy printing, "Don't worry, be happy" headlines. I was on CNBC back then warning them, telling them this was a bubble. What did they call me? Doctor? Doom. They laughed, smirked, rolled their eyes. I was the crazy guy who didn't get it until everything I said happened. And then suddenly, I wasn't so funny anymore. But you know what? I've seen this movie before. And just like then, the mainstream still doesn't see the pin because they still don't think we're in a bubble. And when you don't see the bubble, you never notice when it's popped. Gold is the pin this time. Not some tiny piece of the economy like subprime. This is bigger. This is systemic. Gold is exposing the rot at the core of fiat currency, central bank policy, and global debt. And this isn't just about America either. This is global. The European Central Bank, the Bank of Japan, the People's Bank of China, they've all been running the same scam. Zero interest rates, money printing, and now they've got inflation they can't control and debt they can't roll over. And who's been watching? Central banks have, but not the Fed. No, our Fed was busy pretending it could fight inflation with 5% interest while the government ran $2 trillion deficits. That's like trying to put out a fire with a flamethrower. Meanwhile, central banks around the world have been loading up on gold like it's going out of style. China, Russia, Turkey, record gold purchases. Why? Because they know what's coming. They're getting out of dollars while they still can. And what's the Fed doing? Nothing. Just parroting the same tired line. Inflation is coming down. Right. And I'm the Easter Bunny. I wake up early, can't sleep much these days, too much going on, and I flip on Squawk Box at 6 a.m. New York time. Gold is up almost $100 an ounce. We're talking new all-time highs. You'd think just maybe this would be the lead story. But no. They're too busy talking about earnings reports from Netflix or whatever tech unicorn just missed revenue by 0.1%. Are you kidding me? Gold isn't just another commodity. It's not corn. It's not orange juice. It's the original money. It's the ultimate hedge against government stupidity, and we've had a lot of that lately. So when gold moves $100 in a day, that's not some headline you bury on page 8. That's front page, above the fold. That's markets panic over collapse of confidence kind of stuff. And let's be clear, this is happening before the average investor has even caught on. The central banks are buying, but retail investors still asleep at the wheel. I've said it for years. By the time Main Street starts buying gold, it's going to be at prices that will make today's $3,200 look cheap. They're going to chase the move the same way they chased tech stocks in 1999 and real estate in 2006. The craziest part? The media is trying to rationalize it away. Oh, gold's just reacting to weak jobs data or tensions in the Middle East. Gold isn't reacting, it's predicting. This is anticipatory pricing. This is the canary in the coal mine screaming at the top of its lungs. And Wall Street's too busy checking TikTok to hear it. Now let me show you something. Here's a tweet from a Bloomberg commodities analyst dated just last week. Gold breaks $3,200. Still not a single question about it at today's Fed press conference. Unreal. Exactly. The most important financial event of the year is unfolding in real time, and the people in charge of our monetary system aren't even acknowledging it. That's like being on the Titanic, watching water pour through the hull, and talking about what wine pairs best with dessert. And look, I'm not saying this to scare you. I'm saying this to prepare you, because the bigger moves are still ahead. We haven't even started pricing in the next phase, the collapse of the bond market, the avalanche of sovereign defaults, the irreversible loss of faith in fiat currency. When that happens, when the real panic sets in, gold's going to move $200 in a day, then $300, then $500. You think I'm exaggerating? I'm not. Remember, we're now in a world where $1 trillion gets printed like it's pocket change. In a world like that, a $3,000 price tag on gold is not high. It's a rounding error. If gold simply caught up to the growth of the money supply since 2008, it'd be closer to $10,000 an ounce. And that's before accounting for confidence erosion or global monetary realignment. This is what people don't get. Gold isn't rising because it's hot or trendy. It's rising because it's the only real money left. When paper burns, gold shines. But there's something else we need to talk about, something even bigger than price.
CNBC is the dollar. The dollar is getting clobbered. The dollar hit a new 3-year low against the euro this week. It hit a 14-year low against the Swiss franc. You got all these people, they say, oh, the dollar is the cleanest dirty shirt in the hamper. Well, no, it's not. The Swiss franc's in that hamper, and it's a hell of a lot cleaner. And in fact, the Swiss franc is only a few percentage points away from an all-time record high. You know, you need about $1.25, I think, to buy a Swiss franc right now. In 1971, you could buy one for 23 cents. So that is a huge drop in the value of the dollar relative to the Swiss franc. And of course, even the Swiss franc has gone down relative to gold, but it hasn't gone down nearly as much as the US dollar. Now, this year to date, the Swiss franc's up about 11%. So is the Japanese yen, but the Japanese yen was beaten down, but it's made a big rally. The euro's up 10% this year. It's gone from 104 on January 1st. It's at 114 where it closed the week. These are big moves. And what's even more significant is that this is happening during a time of turmoil, right? Trump basically started it with these tariffs, right? Launched this global trade war, created all this economic uncertainty. No one knows what the hell's going on. Trade is a big part of the global economy. And again, remember, all of these so-called experts predicted that tariffs would cause the dollar to go up. That's why the dollar rallied before, or right after Trump won, because the markets were saying, oh, we're going to get tariffs. That's good for the dollar. And I kept saying no. In fact, when the polls were swinging before he won, the dollar would go up when they thought Trump was going to win, because they were saying, well, Trump's going to be good for the dollar because he's going to slap on all these tariffs, right? I knew that tariffs would not be good for the dollar. But one of the reasons, too, is that people thought, well, it's going to be, people are going to want a safe haven, right? They're going to want a safe port in the storm, that's going to be created by this trade war. Well, they're not buying dollar. They're selling dollar. Gold is the safe haven. They're not buying treasuries either, because I've said this before. When inflation is the threat, there is no safety in treasuries. But the other problem, if the world now has moved away from dollars, away from treasuries, and away from Bitcoin. Not that they ever embraced it, but I'll get back into that. Gold is the only safe haven standing. But what that means is if we have another financial crisis, which I believe we're coming towards one quickly, in 2008, the world responded to the financial crisis by buying dollars. And that's what enabled QE to work, right? Because of foreign demand for dollars. That's what kept the inflation that QE basically was. It kept it out of consumer goods and redirected it into financial assets. So we didn't have to suffer big rise in prices, even though we created all this money.
So let's pick up right where we left off. Gold isn't just rising, it's telling the truth. In a world where everything from CPI numbers to economic forecasts is massaged, manipulated, and spun for political optics, gold stands alone. It doesn't lie. It doesn't yield to opinion polls. It doesn't care who's president or what the Fed said at its last meeting. It just quietly tells you what money is worth. And right now, that truth is terrifying for the people in power. We are watching the endgame of a fiat experiment that's gone on far too long. The US dollar, the world reserve currency, backed by nothing but debt and confidence, is fraying at the edges. The world is waking up to this. The Fed might still be pretending that everything is under control. But behind the curtain, they're panicking. You can see it in the balance sheet. You can see it in the reverse repos. You can see it in the gold price. The Fed didn't just pause rate hikes because inflation was solved. They paused because the system started to break. Banks began to collapse. Treasury auctions began to sputter. And if you listened closely, you could hear the old machine groaning under the weight of 30 years of fake growth, deficit spending, and monetary stimulus. They didn't fix the problem. They papered over it, again, as usual. But the difference now is that gold is calling their bluff. You can't hide from $3,300 gold. You can't pretend all is well when the asset that people run to in times of crisis is exploding higher. And the worst part? Most Americans have no idea what it means. They're too busy watching the next season of whatever's trending on Netflix or posting their lunch on Instagram. That's not a knock on the average person. It's a condemnation of the financial media that's supposed to inform them. They've failed. Or more accurately, they've sold out. They're too busy serving their advertisers, peddling optimism, and distracting you with crypto drama to actually tell you the one thing that matters. Your currency is being destroyed in front of your eyes. Remember when inflation was transitory? That lie aged like milk. Now the narrative is inflation is falling, which is also nonsense. Prices may not be rising as fast as last year, but they're still rising. That's not disinflation, it's slow-motion theft. Your paycheck is still shrinking, your savings still buy less. Your future is still being eroded by the same people who said everything was under control. But let me make this very real for you. Let's say you saved $100,000 5 years ago. Today, that money, assuming it's been sitting in a savings account earning close to nothing, has lost over 20% of its purchasing power. Think about that. You worked hard, you sacrificed, you did the right thing. And in return, the government silently took a fifth of it through inflation. Now contrast that with gold. Over the same period, gold has not only preserved value, it's grown substantially. And now it's accelerating. Why? Because the smart money knows what's next. They see the deficits, they see the debt, they see the demographic cliff, they see the political dysfunction, and they want out of paper promises. This isn't just about returns, it's about survival. Let me bring some international context into this. In countries like Argentina, Turkey, and Lebanon, people already live with the knowledge that their currency is a ticking time bomb. That's why physical gold and silver are part of everyday life there. They've learned through hard experience that you cannot trust politicians with a printing press. In the US, we've been lulled into a false sense of security. We think that can't happen here, but it is happening, just slower. The only difference is that we've had the privilege of exporting our inflation for decades, forcing other nations to hold dollars while we live beyond our means. But now, they're waking up, they're walking away, they're buying gold. Let me give you some hard numbers. According to the World Gold Council, central banks bought over 1,000 metric tons of gold in the past year, an all-time high. China alone has officially added over 200 tons, and many suspect their real holdings are much higher. Why? Because they know what happens when the dollar fails. They know what happens when a superpower collapses under the weight of its own debt. This is not a conspiracy theory, it's math. Just look at the US debt clock. We're approaching $40 trillion in federal debt. That's not counting off-balance sheet liabilities like Social Security, Medicare, and unfunded pensions, which push the real number north of $150 trillion. There is no plan to pay this off. The only solution is more inflation. And that's not a solution, it's slow-motion default. The Fed can't raise rates high enough to stop inflation because it would bankrupt the government, but it also can't cut rates without reigniting the inflation fire. They're stuck, and gold is sniffing it out. That's why it's running. That's why it will keep running. And let's not forget about silver. If gold is the truth, silver is its hyperactive little brother, and it's coming to the party late but strong. The gold-silver ratio is still ridiculously skewed. Historically, it's averaged around 15-1. Right now, it's hovering above 80-1. That's insane. Silver is not just an industrial metal, it's money. It's been used as currency for centuries. And when the monetary reset comes, silver will be dragged higher by gold, possibly even outperforming it. But here's the twist. This won't be a return to normal. This will be the birth of a new system. There's a growing movement toward commodity-backed currencies. The BRICS nations are reportedly discussing a gold-backed trade settlement mechanism. Saudi Arabia is now accepting non-dollar payments for oil. Russia has linked its ruble to gold reserves. These are massive shifts. They signal the beginning of the end for dollar hegemony. And when the dollar loses its status as the world's reserve currency, the US loses its most valuable export, inflation. We won't be able to send our excess money abroad anymore. It will come home. And when it does, prices here will skyrocket. That's when Americans will finally realize the truth. But by then, it'll be too late. So let me be crystal clear. Gold isn't going up. The dollar is going down. Gold isn't getting more expensive. Fiat is getting worthless. And the people who understand this now, before the headlines change, are the ones who will come out the other side intact. Let me wrap this up with one last comparison. In 2006, when I was warning about the housing crisis, I was mocked, ignored, and sidelined. People said I didn't understand the new economy. Well, that new economy collapsed 2 years later, and millions lost everything. Today, they're making the same mistake, but this time, it's bigger. This time, it's not just housing. It's not just tech. It's the entire system. And gold is trying to warn you. So here's the bottom line. If you're still holding 100% paper assets, you are playing Russian roulette with your financial future. You need real money. You need real assets. You need gold. Not next year. Not when CNBC tells you to. Now, because once this dam breaks, there won't be time to build an ark.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.